Hello, YouTube. A big move is coming to the S&P 500 right now. I think it is coming right now this week, so stay tuned. And we're going to talk about everything we need to know because 431.7 was our August high. We tagged that on Friday by getting to 431.99. We backed off into the close, and then we just punched it, getting to 433s today, nearly 434. Also important to note that we are nearly at the area where the Fed started raising interest rates. We're within roughly 1%. And another thing the bulls were able to do today is to actually fill another gap on QQQ, which I believe, please correct me in the comments if I'm wrong, the last gap going back to the all-time high. Here we're looking at April 5th, where we have a gap of 359.93. We hit it, we closed it, and we closed over it. So the bulls continue to march, but it really comes down to the big man coming in on Wednesday, which is going to be Jerome. And there's one more data point that we have, which is going to be tomorrow pre-market or inflation. So stay tuned. And today we're going to talk about everything we need to know going into the CPI report, the BOJ, the ECB, and the Fed. Let's get in. All right. So Fear and Greed notched one more point up here into 78, and we continue to melt up. The pain trade is up, and the bears continue to fuel the rally. But as the Fed signals a rate pause, Powell will have to, which means we're seeing some conflicting data, and when they continue to say they're data dependent, well, some policymakers worry inflation isn't falling quickly enough. Why? Well, because they don't track a CPI like you and I do. CPI is the Consumer Price Index, and PCE is personal consumption expenditure. So this headline number was not available on the weekend, but it is now. The forecast is for B at 4.1, which is pretty close to threes. And the reason why that matters is because we're going to be getting CPI headline number on a month over month, also coming down. And when we look at that number, when it loads up here in a moment, we're going to note that it looks like a pretty steady move down. I'm not going to talk about PCE, which is still the Fed's preferred inflation gauge, because we went through that on the weekend. So stay tuned. And at the end, we will look at that. However, the CPI is sticky here. Core CPI is sticky here at 0.4. Is the market going to focus on these numbers if they come in line, that it's constructive, it is positive? The inflation battle continues to be won, and the soft landing is intact. Well, if we look to the heat map, I would say that's pretty much what the market is looking for. Tech is up. Amazon, Tesla, Oracle earnings today. I'm not sure what it's doing after hours. Adobe earnings later this week. AVGO, NVIDIA, Apple, and all of tech is doing well. As a reminder, we want to see more breadth and depth on the 1 month chart. I'll be talked about on the weekend too. I'm talking about health, consumer non-durables, utilities, communication services, and commercial services. But the market continues to melt, and we just want to make sure that we're looking at the weekly chart because that's really where we focused last week. If we look here at QQQ, we now have a clear downtrend, which is going to be the red line. And what did we do? Well, for this week, we printed a higher high, a higher low, and we're currently over last week's high at 357.66. What does that mean? Hey, if we just hold this area all the way into Friday, which is 4 sessions or the rest of the week, I would say that's bullish. Why? Well, because the squeeze continues, we continue to expand, we're making higher highs, we're making higher lows, and we're closing over previous highs. Same thing for the S&P. We noted that on QQQ, we got to that 61.8% Fibonacci retracement, and then it punched over it. Well, S&P is kind of doing that same thing here where it got to the area, closed up on it pretty much on Friday. The area we closed on Friday was 429.9. So that's within 31 cents. And then what? We punched over it. And we're currently above the 431.99 high we put in last week, which just means same thing. If we can hold all the way until Friday, this looks pretty constructive. If we look back over here to Apple, which I thought was going to be part of the reason why the bears would start to go for a bearish move. Well, what do we have? We have a bearish engulfing weekly candle. Sorry, no, we don't. Higher high, higher low. And Apple right now, I believe, is at a record closing basis, not record intraday high, but it's a record close on low volume. So is the king going to drag us higher? Is Apple going to continue to go? Let's look at Microsoft because Microsoft was also an important one to look at. Not quite back up here to about the 336, 338 area we're looking at, but it doesn't look bad. Just remember that I thought that Apple was going to be a sell the news going into its VR headset. Well, at least as of right now, it's not. Why? Record closing daily basis. Is it going to hold into Friday? That's what it's all about. That is why we continue to tune in every day. And I'm going to ask you for a huge favor. I'm not sure if I already did. Had to hit re-record 1 or 2 times. If you could please smash a thumbs up and subscribe to the channel, I would greatly appreciate that. Thank you ahead of time. All right, let's look at a few more quick charts because Goldman Sachs downgraded oil but upgraded the S&P 500, which means that oil is legging down by nearly 4.2%. Elon Musk would be proud. And this could be related to the rollover, which is going to be happening, but it's a pretty soft move. I'm not sure how the markets, the economy is going to continue to expand when there is just no demand for oil. When oil goes down, it means that there's not very much demand. Going into summer, that is very odd. People tend to travel and move more during the summer. You look at Airbnb, booms, it's up nearly 6% today, which shows that travel trade is in play, but something seems funky when it comes to copper and when it comes to oil. So oil's down pretty notably. Death cross happened into the summer of last year, and it's just been sagging since then, unable or unwilling to rally. We look at Dr. Copper, not that much different, hanging around here on its 200 DMA. We got a golden cross going into the beginning of the year, and people generally use oil and copper when they are building stuff, manufacturing, which means what? GDP growth. But in America, we don't really rely on that. We rely more on these big tech companies, which are all crushing it right now. I believe that RSP got a record weekly inflow last week, which means that people, we can see it by the volume bar right there, $1 billion, one big boy going into inflows, which means people bought equal weight S&P 500 by over $1 billion last week. We got that golden cross. And remember, this golden cross was very important on the S&P, which led to a leg higher. Let's remind ourselves of where that was. Why? It was not that long ago, but long enough. It's right here around February where we have that big dub. We come in, dead cat bounce, we get the golden cross. We fight for a little bit, and then it just melts higher. That's where we're at right now with the high of the year, a 52-week high. So is that same pattern that we saw on S&P going to manifest itself on RSP? Again, remember that we're looking at RSP for breadth and depth, which we just looked at on the heat map. But this is a different way to do it. We can note here that it's trying, right? It's trying to rally. It's trying. And if the market's going to continue to go up, this is what I would expect to see. I would expect to see RSP hitting new highs. All right, a few more quick charts for us to look at. SMH, just because chips continue to be strong, they continue to lead right back up at those highs right here. So we can look at NVIDIA, but looking at the chip sector, this is really important because chips lead tech and tech leads SPY. And right now, chips up here, like if we're going to go higher, it should be right now. There's no notable sell volume, and it's just been a pop flag, pop flag, pop flag. So was that the pop? Was this the flag, and that's the next pop? Well, by going to new highs, that would confirm it for me. All right, I think a few more quick charts, and then we're going to leave it there because we did go through a lot of data this weekend. What else do we got here? Energy. So on that Goldman Sachs downgrade, energy's not doing all that hot. It doesn't mean it's down and out. It just means it's looking a little bit soft. And then something else that sticks out to me today like a sore thumb is XLF, because if we're going to be getting a pause, that should, again, keyword being should, give some relief to these banks. Why? Because we've been worrying about a banking crisis, banking stress. Well, interest rates going higher just adds more stress to these banks. So I'm notably looking at XLF and then also looking at IAT, which is going to be those regional banks. So we have an uptrend here. We're bouncing off our 50 daily. If we're not able to leg up, notably tomorrow, but more importantly into Jerome, we might be in for another shoot a drop, which I've also talked about before. So I'm not going to beat that horse because it's looking like it's starting to get pretty dead. Last thing to look at here is going to be the DAX, because we did talk about the DAX, how on a weekly basis, we saw that it was struggling with its all-time high area at roughly 16,300, hit it in 2021, hit it in 2022, hit it this year, and then backed off. But as we look in a little bit closer, right, for those boomer eyes, what do we note? Well, we note that we have all of these lower tails, which just mean dip buying continuously throughout this period. So if on this attempt, we already see Apple going back up for a record close, I want to see the DAX actually leg up over 13.3. And not only that, I want to see it close above 16.3. We're looking for about 200 more points or a move from here of about another roughly 1.5%. And this level is so important for me because it's the first one that got up here to all-time highs. It rejected like we would have expected. It's coming back up for a retest. needs to build up steam so it can actually claim it. And that would give momentum for the rest of the market, meaning the Japanese market, meaning the US market, to continue to go up and maybe even get closer to 440, God forbid, even 450. So with that said, thank you so much for tuning in. The weekend video should now be queued up here on the left-hand side. I thank you so much for watching, and I look forward to seeing you tomorrow. Thank you again.